Hello everyone, it's me Bella. Today's video is quite special because we will discuss about events happened in 2021 and 2022, the cycle of bullish and bearish. After this video we will be able to understand more situations affecting cryptocurrency's market value. Let's begin. Since 2022 has ended, we have seen that the entire currency circle fell from the peak of the bull market to the current low point like a roller coaster. Cryptocurrencies have suffered a brutal comedown in 2022, losing $2 trillion in value, shrinking from a total market value of nearly $3 trillion since the height of a massive rally in 2021. And BTC price dropped from $69,000 to $15,000. So what happened in the bull-bear cycle in these past 2 years? How did the bull market start and how did it end? Why do bear markets happen? We will make a recap and summary of these issues. At the beginning of 2021, the upsurge of DeFi summer started. There are a lot of DeFi platforms in the market, including decentralized exchange for transactions and borrowing lending platforms. Uniswap and SushiSwap has stand as the top and high-quality DEX in 2021. Outstanding loan projects such as Aave, Compound, MakerDAO, Yearn Finance 2, and Curve etc. has also contributed in more investment of cryptocurrency in the market. At the same time, stablecoins in different forms, large and small, have also begun to flourish, such as the UST issued by the most popular Luna, MIM issued by Abracadabra, and so on. It is because of these reasons that a lot of hot money can use the leverage mechanism of lending for arbitrage. DeFi's market cap has reached $150 billion by the end of 2021, with the rise of DeFi exchange and so much money flowing into the economic issued by the United States in response to emergency fund fighting COVID, which is about around $5.8 trillion, BTC has reached its peak. Another reasons causing BTC to skyrocket is big well-known companies such as Grayscale, Cathie Wood Art Capital or Cathie Wood, 3 Arrows Capital or 3AC and so on entered as big whale and purchased BTC, causing the price to skyrocket. Elon Musk has also led Dogecoin and shitcoin's price to spike after his Saturday Night Live. This proves that any statements or activities done by influenced people or company can affect the market after all. A very important trigger is the situation in Russia and Ukraine war. In early 2022, the contradictions in the situation between Russia and Ukraine continued to intensify. Finally, Russia invaded Ukraine on February 24, 2022, marking the official start of the Russia-Ukraine war. As the war between Russia and Ukraine triggered a surge in international oil prices in the United States skyrocketed, and inflation in the United States was severe. BTC price start plummeting and the saga continue. Moreover, the Fed had to start raising interest rates and shrinking its balance sheet. The US stock market began to fall, and the cryptocurrency market also began to fall. This wasn't the only reason caused cryptocurrency market to go into spiral. Here are 2022 events causing fear for investing in cryptocurrency for investors. 1. Axie Infinity's Ronin bridge hacked. In March of this year, Ronin, the blockchain network that runs the popular non-fungible token, NFT, crypto game Axie Infinity, was hacked for $625 million. When the Lazarus Group started its attack, 5 of the 9 private keys for the Ronin network's cross-chain bridge were hacked. With this vote, they authorized 2 withdrawals totaling $25.5 million in USDC and 173,600 ETH. According to the Ronin Group, Axie Infinity's issues began in November 2021 when its user base had expanded to an untenable size. Consequently, the corporation's safety rules had to be relaxed to fulfill client demand. After the initial phase of fast development was completed, the firm reduced its safety procedures. The main difficulty was a lack of a suitably decentralized network created by game developer Sky Mavis. The hacker acquired access to the private keys of 5 of Sky Mavis Ronin Chain's 9 validator nodes, enabling them to compromise the network. When the hackers gained control of 5 nodes, they essentially controlled over half of the network and were free to accept or deny whatever transactions they wanted. They obtained ETH and USDC via falsifying withdrawals. The crime occurred on March 23, but it was only noticed on March 29, when a user reported being unable to withdraw 5,000 ETH from the Ronin Bridge ATM. In the aftermath of the attack, Axie Infinity developers raised $150 million to reimburse the affected users. 2. Terra USD/Luna collapse. On May 7, when over $2 billion in Terra USD, UST, was unstaked or removed from the Anchor protocol, hundreds of millions of United States dollars were quickly liquidated. It's unclear if this was a deliberate attack on the Terra blockchain or a response to rising interest rates. Because of the enormous outflow of cash, the price of UST fell from $1 to 91 cents. As a result, market players started trading 90 cents in UST for $1 in Luna. When a considerable amount of UST was moved out, the stablecoin depegged. The availability of Luna increased as more people sold their UST during the panic. Following this fall, cryptocurrency marketplaces started to suspend trading pairs such as Luna and UST. Following the initial accident in May, Do Kwon disclosed a rehabilitation plan for Luna, and things seemed to improve. However, the currency's value eventually fell. It was abandoned almost as soon as it began. Finally, Terra launched a whole new currency known as Luna 2.0. Investors lost a combined $60 billion due to the panic selling that accompanied the decline of Terra USD Classic or USTC and Luna Classic or LUNC, a related token. On September 14, a South Korean court issued an arrest warrant for Do Kwon. This happened 4 months after Terraform Labs' Luna and UST tokens collapsed. Do Kwon and 5 others were detained for allegedly violating regional market restrictions. 3 Arrows Capital collapse. When Terra collapsed, the crypto hedge fund 3 Arrows Capital, 3AC, which had a peak market valuation of more than $560 million, suffered significantly. 3AC had invested heavily in several troubled cryptocurrency projects, including the play-to-earn game Axie Infinity, which lost $625 million to a North Korean hack, and the centralized cryptocurrency exchange BlockFi, which laid off hundreds of employees in mid-June. The UST collapse shattered investor confidence and expedited the slide of cryptocurrencies, which was already underway as part of a bigger flight from risk. A flood of margin calls from 3AC's lenders sought repayment, but the firm lacked the funds to meet the requests. In addition, many of the company's counterparties could not meet their investors' expectations, many of whom were retail investors promised 20% annual returns. The crypto hedge fund eventually collapsed after taking on major directional trades and borrowing from over 20 institutions, and the founders defaulted on its payments. 4. Voyager Digital's fall. On July 6, prominent cryptocurrency investment firm Voyager Digital filed for bankruptcy after crypto hedge fund 3AC defaulted on a $650 million loan. 3AC received a significant loan from Voyager with no security. When 3AC defaulted on all of its obligations and its owners left, Voyager lost a significant sum of customer money. Trading, withdrawals, and deposits were all suspended when Voyager reported that 3AC would not repay its loan. In June, Sam Bankman-Fried, billionaire CEO of trading firms FTX and Alameda Research, presented Voyager with a $500 million line of credit to help them weather the market collapse. On July 5, 2022, Voyager Digital Holdings filed for bankruptcy in the Southern District of New York. According to Voyager Digital, the corporation owes between $1 billion and $10 billion to its more than 100,000 debtors. Despite its debts, however, the company believes it has assets worth between $1 and $10 billion. 5. Celsius crash and liquidity crisis. As the price of cryptocurrencies fell, investors on the Celsius network started withdrawing their Bitcoin holdings in search of safer alternatives. Despite stating they were forced to do so due to extreme market conditions, Celsius network halted BTC withdrawals, swaps and transfers on June 12. The value of the Celsius cryptocurrency plummeted by 70% in only a few hours and fell further in the days that followed. The company filed for bankruptcy on July 13, 2022. Celsius had total liabilities of $6.6 billion and assets of $3.8 billion, resulting in a $1.2 billion hole in the company's balance sheet due to the court ruling. 6. FTX collapse. FTX and FTX US crashed due to a lack of liquidity and mismanagement of funds, followed by a large volume of withdrawals from rattled investors. The value of FTT plummeted, taking other coins down with it, including Ethereum and Bitcoin, which reached a 2-year low as of November 9. FTX, a major cryptocurrency exchange, and FTX US, its US branch, filed for Chapter 11 bankruptcy on November 11, 2022. Former founder and CEO Sam Bankman-Fried was arrested on December 12 in the Bahamas and was extradited to the US, where he later pleaded not guilty to 8 criminal charges, including wire fraud and conspiracy to defraud investors, and is out on bail at $250 million. 7. BlockFi bankruptcy. The collapse of FTX earlier in the month generated fear and uncertainty across the market, and following the bankruptcy of FTX, BlockFi went down and also filed for bankruptcy on November 28. With assets and liabilities ranging from $1 billion to $10 billion, the firm had over 100,000 creditors. In addition, they had a $275 million debt to Sam Bankman-Fried's American subsidiary, FTX US. The application shows that the largest client has a balance of $28 million. Following the demise of Three Arrows Capital, multiple firms, including the crypto company that operates a trading exchange and an interest-bearing custodial service for cryptocurrencies, had serious liquidity issues. BlockFi agreed earlier this year to accept a credit package from FTX worth up to $400 million to help it weather a liquidity restriction caused by the exchange's exposure to the Terra USD stablecoin's collapse. As a result of these concerns, BlockFi was reliant on the performance of the cryptocurrency exchange FTX, which now jeopardize its financial stability. So far, many of these projects have shown investors of many faulty and weakness in its management and security, which led to this domino effect of crypto market. The events of 2022 could pave the way for new platforms to learn from the mistakes of their predecessors. So will the following 2023 new platforms will perform better? Will we see bullish trend in 2023? Let's see. This is the end of my video. Don't forget to subscribe to see more of my content. Thank you. Bye.